What's going on, guys? Brian's here. Today is Tuesday, August 20th, 2024. If you're new to this YouTube channel, I highly suggest you hit that subscribe button down below, as each video has been packed with so much information regarding understanding price action and more specifically an analysis around gamma exposure. We will take a look at the 0 DTE gamma exposure and compare it to yesterday. So this was yesterday's gamma exposure profile. This is today's gamma exposure profile. 30 minutes into the market open, we will analyze this information and see what can we take away from this and allow us to be better prepared for each trading day. We will also take a look at a quirk in the SPY's gamma exposure profile. I'm going to share with you guys a position in which I'm currently in that is in a little bit of trouble. So for now, let's just jump right into the gamma exposure for today. You guys know I like to wait 30 minutes after the market opens, let the data settle in, let the price action settle in, let the volatility die down a bit, and then I like to do my own analysis for the day. If I don't see anything that I like on the SPX, then I might not take a trade, and I'd rather wait for conditions to improve. At the start of today, what clues did we have that the market might have pulled back? Let's take a look at the market internals. I haven't shown this in the past few videos here, but you guys have seen this on videos in which I've done a couple weeks back. The E-mini futures were in a supply zone. If we were to maximize this, zoom out, and let's just see how far back this goes. Let me just adjust my volume profile and study, put it on a week to date, or weekly profile, as we should say. And you guys can see I'm just coming up with this supply zone from these high volume nodes. This was the all-time high week POC, and that's what's just stretched out here. So this W is just a note for myself, so I know that this virgin point of control is coming from a weekly profile. We're in a supply zone, but that alone is not enough of a reason just to take a trade. We can see the tick was relatively low today. Even though the market was up at the start of the day, this is a smaller profile here, as this is our 3-minute time frame. This is the SPY. The market was up and it was going up. However, the tick was pretty flat. What was going on with the ADD? The ADD was below 0 and it was pretty flat. So it wasn't really participating in this move towards at least the 0 level. ADD was pretty flat, in a sense going down. And what do we have? We have the VIX. The VIX was up today and it continued to hold its level above yesterday's close, and then it ended trending up for the whole day. Look at the contrast between today with the VIX being up and then it holding its gains versus yesterday where it gapped up and it was in a downtrend from pre-market, and then it just continued with its downtrend into the open. This is a good sign if you're a bull. This is not a good sign if you're a bull. So right off of this one glance, this is my dashboard, or my market internals dashboard. It contains the primary internals that I like to focus on: the ADD, the tick. We have the VIX, which I use as a proxy for implied volatility. We have our eyes on our futures with our volume profile. We have our SPX and we have our SPY. This is a red flag for bulls. We're in a supply zone. This is a red flag for a bulls, not much strength in the tick. This is a red flag for bulls. We are below the 0 line and we're not increasing on the ADD. And this is a red flag for the bulls. The VIX is up and it is not decreasing for the day. So nothing from this viewpoint is indicating that today should be a strong day. So before we take a deep dive in the SPX, let's just take a look at our SPY chart right here. And there's something I'd like to point out. So I'm going to turn off all the studies and let's just turn on the gamma exposure weekly levels that I shared on the YouTube channel here yesterday. This is another element of my analysis as I like to approach every week. If you're new to this YouTube channel, check out the link in the description down below to how I like to prep for the week using the gamma exposure levels. I start every week off essentially the same, mapping out my gamma exposure levels for the week. It is based on the weekly aggregates, meaning I'm combining the Monday, Tuesday, Wednesday, Thursday, Friday expirations into one gamma exposure profile, and then I'm plotting out the levels that are pretty significant. As we can see right here, this is the last high positive gamma strike that I got from that gamma exposure profile. That is coming straight from the notes here, in which I share for you Quant Trading App Gold members. These are those levels at the start of the week right here. We can see this is the last high positive GEX strike that was shared yesterday. This is the gamma exposure profile in which I'm referencing right here. This is that bump 560. Above that level, there isn't really that much of an interest. It would appear from a gamma exposure perspective. These are the 5 expirations in which are being combined to create this profile. We can see how things look pretty flat past 560. There isn't a lot of absolute gamma. There isn't really a lot of positive gamma. So this is already providing a larger context for the week. This profile was generated 1 minute after the market opened yesterday. I've been keeping a detailed snapshot of this every week for essentially the past couple years, as I've adopted this analysis as part of my identity as a trader. So to start the day off, we know from yesterday, if the SPY gets above this strike here, 560, there isn't really much from a gamma exposure perspective to say it should hold above that level. Remember, we already have 4 context clues at this point. But before we even really got to the gamma exposure, there's 4 context clues right here: supply zone, point of control, low tick, low ADD, increase in the VIX. 4 reasons right here before we even get to the gamma exposure to think or believe the market should not hold above this level. This is context. This is awareness of what's going on in the market. And this comes with experience and time. In the beginning, this might seem a little overwhelming as it might appear as there's so many things to look at. This is my dashboard. I'm pretty comfortable just glancing at it. It's not overwhelming. Every time you look at another trader's screen, it can look like there's so much that they're looking at. But I've been staring at the same screen for essentially majority of my trading career. Same exact screen, same exact chart. Not much has changed. So my eyes have become very accustomed. I know exactly what I'm glancing at. I know exactly what I'm looking for. To add more context, there are other monitors that I have up in which we can take a look at some additional things like the NASDAQ, the IWM. What do we have in the Qs? We came right up to a quant trading app significant strike. This is our intraday zone here, and this is our intraday lower zone. So our upper level, our lower level. We had price getting rejected pretty much at exactly the level on the Qs. And let's just go back to the SPX so we can focus on that. So I wanted to point out the intention of why I wanted to show so much context before we dive straight into the gamma exposures, because I want you guys to understand that gamma exposure is not the only way to analyze or interpret the market. Now that we already have our context, just from taking a larger approach at the market internals, like the ADD or the tick, and we're using a level that was established from yesterday of 560 on the SPY, this is where we can get a little bit more nuance with things and pull up the SPY and say, what reasons do we think we're going to hold above 560? Let's take a look at the 0 DTE gamma exposure. This is where there was an interesting quirk here today, as there was essentially no net GEX for these strikes above 560. We can see at this point, this is 15 minutes after the market opens. This is pretty strange. There was a trader in QTA that had opened up a ticket here today that asked if there was something wrong with the data feed, and I replied to them. I can't show the private tickets as the tickets are for private customer support. But based on that ticket, I decided to also share this information here for the quant chat. This is there saying there's no net GEX here. And what do we have on the options chain for the SPY? There's essentially 0 open interest here on the put side and 0 open interest on the call side. So regardless of the fact that we see some gamma exposure here, these strike prices are not going to read as any GEX on a positive or negative scale. So above 560, there's essentially no real open interest until we get up to this strike price here. And that's why on the chart earlier here today, we didn't see any net GEX above this strike. So that's something that's already strange, but we already knew at the start of the week, if we scroll here, that above 560, there wasn't really much interest to begin with. So on a 0 DTE standpoint, that's just extra confirmation for what we already knew from yesterday. If the market got above 560, what are the reasons to think it's going to hold above that level? There really isn't much. And now we can get into the meat of it, or the juiciness of it, and we can dive right into the SPX gamma exposure. We have our SPX data feed in which we will take a look at, as I've been sharing at the end of these videos, where we will be able to review the quant trading app's trade engines graph. So we'll be able to see how this played out here today. There's some significant clues on this graph, but we'll save that towards the end of the video, as that is proprietary to quant trading app. And this is where we can take our deep dive into the gamma exposure. So this is today's GEX 30 minutes after the market opens. This is pretty much where the SPX is at this point. And what does this graph show us in relation to yesterday? If I was just to flip between these two here, yesterday, today, yesterday, today, yesterday, today, what do you notice? If I were to ask you which one of these profiles looks more bullish than the other one, this is today, this is yesterday. Look at all this net positive gamma and look at this net positive gamma. Which one looks more like a raging bull? This one or this one? If you guessed this one, you might want to guess again. It's pretty apparent this is the gamma exposure profile that looks significantly more bullish. Look at yesterday's price action. Boom, straight up. Look at today's price action. This is not an instance that is cherry picked. At this point, I've lost track of how many examples or videos I've done on gamma exposure, especially over the past few weeks. You guys at this point should be building up a reference in your mind of what type of gamma exposure profile results in what type of day. This should be cemented in your mind as a bullish day. Review yesterday's video in which we did a deep dive analysis in this. Again, this is 30 minutes after the market opens. So while it's still pretty choppy here and you're trying to decipher if it's going to be a trending day, is the market going to go up? Is it going to go down? Is it going to go sideways? As you're trying to analyze this, this looks pretty healthy for bulls. Why does it look pretty healthy for bulls? We have a lot of volume. We have a lot of speculation to the upside here. I don't care who's selling calls or buying calls or whatever. That's not what we're trying to decipher here. I've been talking to so many gamma exposure enthusiasts, there's so many traders that come from other platforms, and it seems like you guys are just getting confused. We're trying to pick what are the market makers doing and what's going on with this and all these complicated questions. Forget all of that. Just think about it as if you're a kid. Maybe you're not even 10 years old yet and you're trying to keep it so simple for yourself. I don't care about all of that. I just know there's a party going on up here. That's what this is telling us. There's a party going on past the high positive gamma. Why is there so much high positive gamma past the strike price that already has a lot of positive gamma? This is where the current strike price is. If the market was to get above this strike here, there's enough participation, there's enough activity past this strike to think we can go higher. In contrast to today, this is where the current strike price is. This is our P1 strike. There's no party going on up here. Where's the high positive gamma? Why does it look dead? Why does it look flat? There's nothing going on up here. If you're a bull and you're speculating that the market is going to go up to 635, you want to see participation way past the strike price in which you're interested in, because the likelihood of us going to the strike price that you're targeting is significantly higher if you see enough speculation higher, if there's enough participation, if there's enough of a party going on. That's what you want to see. This profile, at this point in time, the market is already in the midst of all the volume. The volume essentially is happening around here to here. Look at all this put volume in relation to this call volume. There's still a lot more call volume around the current spot price, but this is spread out pretty decently in contrast to yesterday. Look at this here. This is pretty low put volume in contrast to all this call volume. It's more as if there's a mountain. It's not just volume. I'm leaving out the gamma exposure because this is pretty in your face, as I would say. We can see all these big green bars. It's pretty apparent. If we were to just draw this level around here and use this as a measure for high gamma exposure for the day, we can see, what is this, around maybe 8 million net GEX. This strike has over 8 million, 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 over 8 million. How many of these strike prices are past the P1 strike? The P1 strike is just a strike that has the highest amount of positive gamma. P is positive to me. 1 is just saying it's the number one strike price that has the most amount of positive gamma. P1. That's all it is to me. Why is there so much speculation across P1? If we take a look at the highest negative gamma strike, that would be this one. This is our N1 strike. It is 540. This strike has a negative GEX of maybe around, we'll say, maybe negative 3 or 4 million or so. This is nothing in contrast to all this gamma up here. I don't pay attention to these numbers. It's not that relevant to me because it's all relative to that day. Yesterday, a lot of high net GEX appeared to be over 7 or 8 million. If we take a look at here today, look at these numbers. This is pretty decent. This is a high amount of gamma exposure for a day such as today. How much gamma exposure is this? This is almost 15 million. This is probably 13 million net gamma 30 minutes into the market opens. Yesterday, 30 minutes into the market opened, the positive gamma profile was spread out in a pretty wide range, if you ask me, with a lot of gamma levels that were relatively high in comparison to the put strikes. So if this is our highest put strike, and that strike has about 4 million, negative 4 million gamma exposure, the strike prices on the call side that have about 4 million call gamma is about this level here. This strike price pretty much matches this. So in other words, all I'm trying to point out is relative to this day, and relative to the positive gamma to the negative gamma, I'm eyeballing it and saying, hey, where is there a lot of gamma for today? It looks like these strikes are all pretty large. That's pretty important. Today, what are the strikes that stick out? Obviously, we have our P1 strike. This is monumental. It's very apparent. Then we have our N1 strike right here. This is pretty big. These are the two highest positive gamma and highest negative gamma. You always want to be aware of those two strike prices. Then if we were to try to determine what's a lot of gamma for today, we can use this as a baseline here. We can say, hey, 10 million gamma exposure is pretty large. The highest negative gamma strike appears to have about maybe negative 8 million gamma or so. Again, the exact numbers don't matter. They're going to change from day to day. I'm just demonstrating this for purposes of this video to hopefully educate some of you guys, as well as share how I'm interpreting this information. This is pretty high here for me. This is pretty high. 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 Obviously, this is pretty high. This is pretty high. And then we get pretty flat as we get past here. So if I'm looking at this chart and I'm asking myself, as a bull, how far do I think we're going to go today? I don't see much reasons to think that we're going to go past 650. However, how confident am I that we're even going to get past 635? There really isn't that much interest. We know the absolute gamma strike is going to act as a significant strike as it is latched on to the highest positive gamma strike. If the market got up to this level, I would not have expected us to get past 635. We didn't even make it up to 635 because we had enough context earlier in the day from outside of the gamma exposure to not really expect it to go much higher. We also had the SPY gamma profile telling us there isn't really much net GEX past 560. So I'm just layering all this context on top of just a couple images here. We have this image. We have this image. We are building references in our minds. That's why I'm showing you guys yesterday's gamma exposure. And this is how you learn. This is how you get better. It is repetition. It is being able to relate one thing to another, because in a void, if I showed you this as I did yesterday and I said, hey, this looks pretty bullish, you won't really know what to compare it to, which is why I did the video comparing it to a bullish and a bearish day, what the gamma exposure profile looks like. But as we take a look at this profile here, now you're building some sort of context and you're building some sort of reference in your mind, as this does not look that bullish. Even if we go up, there isn't much expectation that we go higher. You guys know, not only do I like to point out the highest positive gamma and the highest negative gamma strike, let's also then think about where does the overall net gamma turned negative. We can see this right here. If we were to split this down the middle, this is all our positive gamma on this side. This is all our negative gamma on this side. So right here is the apex of where this splits. This whole area ends up becoming an area of some sort of transition for gamma exposure. And this is where we can expect things to be choppy. If price is above it and we get down to this level, we would expect it to act as some sort of support. We see this little positive bump right here. This is 590. Let's plot these levels now on our chart just for purposes of demonstration. 590, going to make it thicker. Boom. So there's our 590 strike. As we zoom into the chart, what type of price action do we have here? Choppiness, consolidation, the level is holding. That is to be expected. Earlier in the day, we are aware of 590. This is our last little bump in positive gamma. Bulls are going to essentially want to defend this area. If this area was to give up, we start entering bearish territory. However, on a day like this, there isn't really much of a reason to think we're going to go much lower than 575. So we're already establishing some sort of a gamma range for the day in terms of expectations for how far up or down the market might go. Now let's take a step back and ask ourselves, outside of gamma, what other additional confluences do we have at this level? Let's take a look at our SPY chart. What do we have here? A level from yesterday. This is a positive gamma exposure bump from the start of the week. We already had this level on our charts. If the SPY is not going to hold above 560, where are we expecting it to sell off to? If it sells off to this level, we would expect it to hold this level. So this is from a weekly standpoint and a significant gamma exposure level. Let's turn on our studies and see what other confluence do we have at this level. Clear our chart. What do you know? We also have the 2-day anchored VWAP. It didn't quite come down to it, but it is in this area. Let's take a look at our Qs. What do we have right here? We have the 2-day anchored VWAP, the 2-day anchored VWAP. Context, guys, multiple things telling us down here to look for a potential bounce trade if you are looking for a reversion to the mean. I believe I shared some of this here earlier in the day. There's all sorts of confluences. We had the total gamma flip. For purposes of time, I can't compound all of the confluences we have as quant trading app members, as the point of why this was built was to make it very simple for yourself. If you are not sure of a level, quant trading app will let you know, hey, we have a lot of confluence at 558 for the SPY. So if you're looking to take a trade, these are 15-minute candles. Look at how much time there is to decide if this is a trade that you want to take. Do you want to sell puts below this level? Do you want to buy calls? How far up do you think we're going to bounce to? Well, what do you know? We bounce right up to the second highest positive gamma strike. The gamma exposure page on Quant Trading App draws the levels on the charts. I draw these levels on the chart for YouTube as I'm trying to just showcase this, demonstrate it. This is for educational purposes only, but the gamma exposure is plotted on our charts automatically for Quant Trading App members here. Here's our additional confluence. Again, just pointing out the 2-day anchored VWAP. We have our options volume range. This is something I have to leave out of most of these videos, again, just for purposes of time, but this is letting us know it is the highest #1 put volume strike for the SPY. It is also the options volume range for the day. So 558, all sorts of confluences. This page auto refreshes every 5 minutes and it will adjust these levels. So if you're looking for extra reasons to take a trade, again, QTA is providing so much context. So I'm just showcasing all of this additional confluences for you guys. But for the most part, again, same method, 30 minutes into the market opens, we're already aware of our levels. We can anticipate what type of price action to expect for the day. Are we going to have a choppy, a bullish, or bearish day? So to come around to the conclusion of this video, you guys know at this point, you should have seen in the previous videos, we have the SPX trade engine for quant trading at members. This, in my opinion, really seals the deal and brings it all together. So this is it here today. I'm just going to play the tape. A big difference between already at the start of today in comparison to some of the other days. We can see that the absolute gamma strike opened pretty close to where the SPX started today. The power strike is up here. They're not in sync with each other, and they're pretty close to the current spot price. This is something that I think I shared about a year and a half ago on this YouTube channel, where I was putting out these 45 minute videos where I was recapping every single day of the week in one video. And I shared this to you guys. If the spot price opens up pretty close to the absolute gamma strike, especially if max pain is there, at that point we didn't have this proprietary power strike for quant trading at members, but you guys already know this tends to be days in which the market is pretty choppy. Here's a day in which the absolute gamma strike is not that far. The power strike is also not that far relative to what we've been seeing. It's only about 20 to 13 points or so away. It's not very far, so I wouldn't expect there to be a large move to the upside. As we can continue to play this out, we can see the power strike ended up dropping down. Absolute gamma jumped up. Let me pause that. Let's just rewind it for a bit. We do see at one point in time, both of these strike prices right here. Market pulled back, the power strike and the absolute gamma strike jumped up, but it didn't last. So from here to the next 5 minutes, this is 5 minutes, here we go. 10 minutes later, the absolute gamma strike drops back down here. We continue to play this out. And now we see the power strike latches on to our absolute gamma strike. When this happens, guys, this becomes a very powerful level, even though it's still very early in the day. I've mentioned to you guys quite a bit before 10:30, before 11 a.m. or so, the power strike is not that powerful yet. It's not that significant. It gains its strength as the day goes on. However, you can use it to gauge some sort of direction early in the morning, but it's really going to shine the closer and closer we get towards power hour. But when we see it latch onto the absolute gamma strike, this is when we have two very significant things syncing up with each other. So as we play this out, my expectation at a point like this would be some sort of choppiness and consolidation. Remember, we already have context. We already know where the SPY is. We already know where the SPX is. We have all this prior information and prior knowledge here. So we already understand what's going on here at this 590 strike. This is just bringing it all together for us. So we continue to play this out. The expectation would be we should not really go much lower. We should chop around here. I was having a Zoom session at this point here. I was talking to a trader one-on-one. He's predominantly a call credit spread trader and a put credit spread trader. So we were just talking about ways in which he can capitalize off of selling puts below certain key strikes as well as selling calls. So I was doing a private session here, but for the most part, I remember telling him this is why I would expect the market to close around the 560 level. I was sharing with him butterflies as he doesn't trade butterflies. He's mostly, again, a vertical spreads trader. He likes to sell credit. Just letting this play out so I don't end up talking too much over this video, as again, I can talk about every few minutes here, but for the most part, you guys see where the market ended up closing right around the 5,600 strike. For myself, what I did is I ended up running a butterfly here. I just have this mocked up as it's closed here. Obviously, the market's closed. I'm no longer in this position, so I can't really showcase to you guys the live P&L, but for the most part, I have it in terms of one lot, just so you guys can see if you scale up or scale down. The risk on a trade like this with 5 lots is only $1,200. Max reward here, $2,400. Let's just bring this back down to one lot. I like to showcase things in one lot as you guys can scale up or scale down. This is essentially about the equivalent on the ES. So I was just targeting that same 5,600 area on the SPX, running an ES butterfly. Didn't really want to have much risk to the upside. So I structured it as a broken wing. So therefore it didn't matter how high the market ended up bouncing. I wasn't going to take a loss to the upside, but I was expecting a little bit of a bounce here. And that came from understanding where we were in context of everything else. The market had now dipped down to the expected move for the open. There wasn't really much interest on a gamma exposure perspective to see that we would go much lower. There wasn't really that much put volume. I think if we can take a glance right here, if I were to just jump at later in the day, we did turn negative for a brief moment. Here's 580. However, things still look pretty flat from a put perspective, so I expected the market to end up heading back up to our absolute gamma strike of 560, which was also our power strike. To wrap up this video now, I'll just share with you guys an extra position that's not going pretty well for me. This is a swing trade here. I'm in a couple of these iron butterflies and long call butterflies. It didn't start off as a long call butterfly, and it was just an iron fly. This is the SPX position here. I'm a little bit annoyed with it. Not down that much, but down about $424. What's mostly annoying is the fact that the implied volatility has increased since I've opened it, and that's what's really affecting the trade as the market is consolidating within the range in which I would have expected it to consolidate, but I have to wait for implied volatility to decrease. I believe it's gone up about 2% since I've opened the trade. So in my expectation, I would have been up a little bit over $500 at this point. The plan was always to hold it for me until Friday. This is a trade in which I did share for some of you QTA members in the income spreads page here. So this is how it started off last week here. Trade was going pretty well. I believe it was up about $1 or so, but I didn't open this trade just to get $1 premium. I didn't size up into it, so I only have 2 lots. And then I ended up having to add this as the market continued to go up. And then since adding that strike here, the implied volatility has gone from about 14.8% or 14.9% to about 16%. So that's what's affecting it. I'm not referencing the option strats implied volatility. I'm referencing the implied volatility on Thinkorswim. I take notes of both. It's this implied volatility right here. It's almost 16% right now. When I first opened the trade, it was not that high. So again, that is affecting this position, assuming the implied volatility decreases and the market pulls back a little bit. I would like to get out of this trade by Thursday, as the rest of my week is going to be pretty chaotic. I won't be able to micromanage a lot of these positions, which is why I went a little bit further in DTE for that trade. And in the meantime, I'm enjoying trading mostly around the ES options. Guys, if you enjoyed this video, like it, share it, leave a comment down below. Let me know if you're enjoying the continuation of this series. Hopefully this is starting to really sink in how you can use the gamma exposure profile to map out your day, understanding significant levels, understanding how price is likely to trade for the day. Link to Quant Trading app is in the description down below. There's a lot of information in Quant Trading app. I love being able to go back and view the archived gamma, and that's how we're able to reference today's gamma. We can jump back to yesterday's gamma, and that's how we can build a reference in our mind. If you're ever in doubt of, hey, when was the last time the market was selling off pretty bad, you can find that day on your chart. Then you can come back here, you can select that date, and then you can analyze what the gamma exposure looked like at that point in time. The proprietary trade engine graph is right within this section here, and this is updating every 5 minutes. It is archiving all of this data, so its intention is for it to get smarter and smarter over time. And that is still just a fraction of the information we have available to Quant Trading app members. I left out the weekly levels in this video here, but the other thing is we know the market closed over 2 sigma last week Friday, and that already is an edge in itself. If we close over 2 sigma, well over 2 sigma on a Friday, the following week it's very unlikely that the market closes over the weekly resistance level. And on the SPX we have that right around here or so, if I remember correctly. Thanks for watching again, guys. I'll catch you in the next one. Take care.